Hi class, I just want to welcome you to chapter 3 of your text, Preparing Your Taxes. This is going to be a fun chapter. I know for some of you it scared you to death, but this is something you're going to want to read and read again and become familiar with. By the end of the chapter, I want to help you prepare a basic 1040 EZ tax return. Let's get started. I'm going to break it down, the videos, into the same sections as what the learning goals are for the chapter. The first one we want to look at is understanding your federal income tax principles. When you look at it, the Internal Revenue Service, which I know y'all have all heard of the Internal Revenue Service, that is known as the IRS. It's responsible for the administration and enforcement of federal tax laws. It tells you the typical American family pays more than a third of gross income in various taxes. So the average family pays a third of their gross income in various taxes. And that's kind of scary. That's a staggering number. If you look at the economics of it, you see we have a progressive tax structure. So the way that it's set up, the larger the taxable income you have, the higher the tax rate. Also, as your taxable income moves to a higher tax bracket, that higher rate applies only to the additional taxable income. All right. When you look at an example of this, you see it on this rate schedule here. You see on the first $8,500 of money that you make, you pay what rate? 10%. Okay. This is a progressive tax schedule. From $8,500 to $34,500, what do you pay? 15%. So you would figure it like if you made $32,000 a year, you would say $32,000 minus $8,500 to get this number and multiply that times 15%. So the first bracket is, have you ever heard someone tell you that when you made a certain amount of money or you got a raise, it puts you in a different tax bracket? These are the tax brackets, okay? Now this is based on 2011. So this is not the 2013 or 2014 rates. This is 2011. When the book was published and they were referencing it, they couldn't go back. They couldn't make it any more current than 11. So on the first $8,500 you make, you pay 10%. On the next bracket of 8501 to 34.5 up to 34.5, you pay 15%. From 34.501 to 83.6, you pay what? 25%. And so on and so forth. If you are fortunate enough for your income to be $379,151 or over, you're going to pay 35% tax rate on anything over $379,151. Okay? Just to give you an idea. Now, the economics of the income taxes is this. There's a marginal tax rate, and the marginal tax rate is a tax rate paid on the net dollar of taxable income. The tax rate paid is on the next dollar of taxable income, okay? The average tax rate is the rate at which each dollar is taxed on average. So you divide your tax liability by your taxable income, and you get your average tax rate, okay? So if you look at an example of this, you see that Scott and Nathan's taxes are this, okay? Scott makes $45,000 a year. If we were trying to figure out his tax liability, his federal income tax liability. No, we're not talking about Social Security or Medicare. If you look on your pay stubs, you'll see. Okay, I'm going to show you a little example of a pay stub. So you see this pay stub here. And this might have been, your stub that comes with your paycheck. Or if you have money that's direct deposited, then you get this. They give you actually a pay stub because your money is direct deposited. But if you still get a paper check, you might have this stub along with it. Shows your hours you worked, your rate you're paid. And so if you look at this pay stub here, what I wanted you to be aware of, next time you get a paycheck, if you get a paycheck, I want you to look at, it'll tell your gross earnings, and then it'll say, different pay stubs stated a different way, but you'll have federal income tax, or maybe it says federal tax or federal withholding. Some of the stubs that I see say FWH for federal withholding. Then it's going to say Social Security and Medicare, the amounts that are held out, and then it's going to say state tax if you have state tax held out. And then it'll give you your net pay. Normally, it will tell you your withholdings for this pay period, and then it'll say YTD, which is year to date, deductions or withholdings, and it'll give you a year to date amount. And that's just to give you an idea. But if we look at Scott and Nathan's taxes, and we're figuring his federal income tax only, he made $45,000. So the way that you would figure it is, they started from the top number. Remember the tax scale we were looking at, and 45,000 fell in what bracket? This bracket. Okay, I probably would have wrote it the other way, and I would have said 8,500 times 10%. But and that is this bottom rung. But they're writing it the other way. They're saying, well, here we go, 8,500 times 10%. So the first 8,500 you pay 10% tax on. Then the next bracket was 34.5 to 85.01. So you could say the amount that you have, which is 45,000 minus 8,500, which was the first bracket, and you would get your total amount here. So 45,000 minus 8,500, and that gives you that amount. And I think they've even wrote it in a different way. So let me back up. Okay, we got to break it down into these levels. Okay, and the levels are 8,500 for the first 10%, 85.01 to 34.5 you pay 15%, and from 34.5 to 83.6 you pay 25. He made 45,000. So this is going to be our top bracket. Okay, so like I said, I would probably write it this way, but they're writing it a different way. And I would say 8,500 times 10%, then 34.5 minus 8,500, which is this bracket here, to give you this amount, times 15%. So it was everything of this bracket, and now we need to figure out the last 25%. And it's only going to be 45,000 minus 34,501. Okay? And that gives you 45 minus 34,501 times 25%. His tax is $73.75. Okay? Now, that is his tax liability for the year. You don't pay that all at one time unless you only get paid once a year. You pay that as you're paid throughout the year. So if you look at Nathan's, you see that he made $90,000. So he is going to go where? To what bracket? To this bracket here, the 28% bracket. So he's going to pay 10% on this 8,500, 15% on this bracket, 25% on 34,501 to 83.6, and then the last amount, 90,000 minus 83.6 times 28%. So when we do that, we come up with 18,817. And it's tax brackets, okay? And that gives you your tax liability for the year, your federal income tax liability. Not Social Security, not Medicare. We all pay the same amounts, same tax rates for that. This is you paying your income tax on the money that you make. So if we look at the next thing we want to touch on, you have to know your filing status. There are 5 different filing status. There's single. Single is for anybody that is unmarried or legally separated, okay, with no children that they're claiming. That would be single. Then you have married, filing joint. Married, filing jointly is married couples who combine income and deductions on one return. Married, filing separate would be people that are married couples who file, their spouses file separately. You don't file your tax return together. Then you have head of household. Head of household is anybody that's considered unmarried and it pays more than half of the expenses for their self and their dependent. That's the head of household filing status. And then qualifying widow or widower with a dependent child, if your spouse has died within the last 2 years and you have a dependent child, you can claim as a qualifying widow or widower. Okay? That's all for this video, and we will continue on with it in the next video.